Hey guys, so you're in TurboTax and you're filling out your rental property information and you come to this screen and it says, let's see if you're eligible for the QBI Safe Harbor. QBI, Qualified Business Income, is a deduction that you can get. It's worth up to 20% and it can be applicable to income that you get from your rental property. You will find this screen right here at the end of when you enter in all your rental property information. That's when you're going to arrive here. So let's take a look at what it's asking and see if you qualify. This is talking about a safe harbor. And a safe harbor simply means that if you meet the conditions that it lays out, that the IRS has laid out, then the IRS won't question your position and won't question your deduction. The biggest thing on this page, the biggest hurdle is, did you perform 250 hours or more in rental services across all your properties, either by you or by people that you hired? This is the biggest hurdle right here. 250 hours in a year. 250 hours is approximately 5 hours a week. It is just under 5 hours a week. What they're trying to determine, the IRS, is my rental property a business or is it just an investment? A business is something that you actively do, whereas an investment is just something that is more passive. It may generate income, but you're not really doing anything in an investment. You're just sort of holding the property, you're collecting rent, but you don't have a lot to do. You don't have a lot of responsibilities. Whereas a business is something that you're actively participating in. You're doing something on a regular and continuous basis. So here's the question. Do you perform 250 hours or more, 5 hours a week, by you or by somebody you hired? It could be a property manager. It could just be contractors that you hire to do work. It could be a very steep threshold, though. If you only have, let's say, one property, you have one house that you're renting out, do you really put in 5 hours a week of work? Probably not in most cases. If you own multiple properties, if you have 2, 3, 4 or more, you probably could justify putting in 5 hours a week on all of them combined, because it's right here, it says across all properties. Okay, so if you just have one, 5 hours a week might be a lot. But if you have multiple, 5 hours a week actually might be pretty reasonable. So this is a very facts and circumstances based question. If you believe that you perform 250 hours or more on your rental property across all the rental properties you have, and you meet this other basic criteria, you keep separate records, you don't live there, it's not your residence, it's not a triple net lease, which for most people watching this, it's not going to be. There's a definition of what that is down here if you're not sure if you have that or not. Most people, the answer would be no. And you did not rent this property to a commonly controlled business. So these four are relatively simple to meet. The real hurdle is 250. But if you meet that, if you meet the 250, then you would select, yes, I meet this criteria and I am going to get the QBI Safe Harbor. And the IRS will not question that. That's what the Safe Harbor means. It means if you put in 250 hours, they're going to say, okay, you must have an actual trade or business, not an investment, because you're putting in 250 hours in a year. But if you don't, you're going to select no. Now, it says down here, no problem. You may still qualify for the QBI deduction, which remember could be up to 20%, without the safe harbor, and we will walk you through that next. So you may still be able to get this, and we're going to go over a bunch of questions that you can ask yourself to see if you qualify on the next screen. The only difference between this screen and what we're about to cover is safe harbor means if you put in the 250 hours a year and you meet up all these other criteria, the IRS will never come back. They've pre-agreed not to come back to question that. They will just accept. You perform this much time on a rental activities, you qualify for the 20% deduction. In this case, we're going to assume that, so if you do, you click yes, and then that's it. You will qualify for that. You'll get a 20% deduction, up to 20%. If not, we're going to go to the next screen and see if we can qualify anyway. So I'm going to click no. We're going to go to the next screen, and it's going to ask you, is this qualified business income? Now, the system here, the TurboTax system, is basically going to accept whether you say yes or no. You have to decide, is this qualified business income? And if you click on this right here, it's going to give you this entire screen full of things that you might consider. Let me summarize for you the basic things you want to consider. Remember that what they're trying to determine is this a business? Is what you're doing with this rental property, is it a business, a trader business, or is it just more of a passive investment? All right, so let's say we don't meet the safe harbor, we're not putting in 5 hours a week, but there's a lot of other criteria that you could think about to claim that you are eligible, that this is a business. It's not an investment. I'm doing this, I'm renting this property as a business. So the first one is, do you have a profit motive? Are you renting this property? Did you buy this property or did you get this property because you intend to make a profit off of it, a profit that you will use to grow your business or to live on? You're not just, the opposite of that would be like, my intention is just to like hold on to this property, and if I can rent it and it makes some money, great. And if it doesn't make some money, that's okay too, but I'm going to just keep it anyway. That's not really a profit motive, is it? Like if you really have a profit motive and you're renting the property, or you're trying to rent the property, let's say, but for whatever reason, let's say it can't rent, or there's just some reason, maybe you would just get rid of it at that point. So that would be more of like, I have a profit motive. Like this will either make a profit or I'm just going to get rid of it. The opposite would be, I'm going to keep it either way, whether it makes a profit or not. If you have a profit motive, that would be a factor leaning toward, this is a business more than an investment, okay? And I want to be completely clear. Under the IRS rules, it's very, very broad, and this is a gray area of what actually constitutes a trader business. It's all going to be facts and circumstances based on your situation, okay? So you have to go through these questions, and you're trying to make an argument. Do I have a real trader business here that I'm actively involved in doing something on a regular or continuous basis, or is this just a passive investment? Here's some other questions. Have you set up an LLC to hold this property? Now, you may want to set up an LLC for legal reasons, right? To shield you from legal liability if anything ever happens with the property, to protect yourself. That's one purpose of an LLC. But another purpose is, if you set up an LLC, which is a separate legal entity from yourself that holds the property that's being rented and collects the rent and acts as the owner/manager of this property, that is a step toward running a business more than just holding a passive investment. When you set up a business, when you set up an LLC, you should document, what is the purpose of the business? Is the purpose of the business simply to hold one passive investment, or is the purpose of the business to acquire more rental properties, to grow a rental property business? If this is your purpose and your intention, that is another piece of evidence pointing towards, I'm running this as a business, not as a passive investment. Do you maintain separate books and records, like in an accounting system like Quicken or QuickBooks or in Excel? Do you track things separately for this one property that you're renting, or for multiple properties that you're renting? If you do, that is a piece of evidence leaning toward, this is a business, a trade or business, not just some investment that I'm just running personally. I commingle all of the accounting activity with my personal stuff. Separating it out is evidence towards this is a business more so than an investment. Do you maintain a separate bank account for the activities of this property? Do you commingle funds in your own bank account? If you separate the funds out for this business, it's another piece of evidence leaning toward I run this as a business. I'm not commingling the funds with my own bank account. I have it separate. The books are separate. The bank account is separate. The more things that I set it up in an LLC, the more things that you can do to establish this as a real trade or business, the more justification you have for saying, yeah, this is a business that I participate in for a profit. It's not just a passive investment. And the more evidence you have, the more justification you have to take the qualified business income deduction, even if you don't meet the 250 hours. Next question, do you perform activities related to the property regularly and continuously? And there's no definition of what regularly and continuously means. Remember I said that to meet the safe harbor, you got to perform about 5 hours a week. But you know what? What if you only perform 1 hour a week or 2 hours a week? Is that regular and continuous? Well, there certainly is an argument that it is. I mean, if I'm performing 1 to 2 hours every week doing some kind of activities related to this rental property, I believe you have an argument to say, I perform regular and continuous activities, which is one of the criteria for running a business and not having it be an investment. 250 hours is just a safe harbor that says, we, IRS, will never question you whether you're running a business or not if you perform at least 250 hours. But it doesn't mean you have to perform 250 hours to be regular and continuous. You can perform 1 hour a week regularly and continuously and have it meet the definition. It's all a matter of accumulating this evidence to point to the fact that this is a business. I hold it separately, separate books, separate bank account. I perform regular and continuous activities. That makes it a business versus a passive investment, which allows you to qualify. Here are some things that you could be doing. You or a property manager or a property management company or contractors that you hire. Any person that you are engaging to perform activities on your behalf on this property count as part of the regular and continuous time. Marketing the property for rent, putting it online for rent, screening the tenants, collecting rent, responding to maintenance requests, coordinating repairs with vendors, purchasing materials, supervising contractors. Any of this stuff, any and all of this stuff qualifies as activities that are regular and continuous. So this is a facts and circumstances based question. The more evidence you can provide and document, you want to document all this stuff, you want to have it written down in a keeping track of, if you're doing this stuff, it would be great if you kept track of it. You can keep track of it in a spreadsheet. I spent X number of time doing this. I spent X number of time doing this. I spent X number of time doing this. Put down the date, put down the amount of time, track it like you're running a business. And that's what it all boils down to. It's going to be, are you legitimately running a business and evidencing that you're doing it, or are you just sitting around doing nothing, collecting a check once a month on a rental property, and there's really no effort involved? And if the answer is the latter, that there's no effort and you're just collecting it, probably doesn't qualify for the QBI. But if you are evidencing and documenting all of these things and saying, this is a business, I'm running this as a business, my intention is to run it as a business, I would argue that you have a justification to click this box right here. Yes, this is qualified business income. That's the argument I'm going to make. I'm going to take this deduction, which is worth up to 20%. And here's all the stuff I have to support that position. And if you go into this large body of information right here, you will see right down here, numerous court cases exist where situations meeting the description of having been considered a trade or business, and there are many situations that have not been considered a trade or business. So that's the real question. There are numerous court cases that go one way. There are numerous court cases that go another way. It's all really about evidencing and documenting that you're doing all this stuff to support this is a trade or business. And of course, from a tax planning perspective, the more time you spend doing this, the more properties you get, the easier it will be to justify and document. Yeah, I spend at least a few hours a week doing all of this. I've documented it. And if you get enough properties, you'll easily hit the 5 hours a week, and then you get the safe harbor, and you can go back on this screen and just say, yeah, this qualifies for the QBI Safe Harbor, and then there are no more questions to answer. You'll get that up to 20% deduction for QBI.